Hello and welcome to Accounting 212 at UMass Dartmouth, Spring 2018. This is the online section 7102. I know we had our icebreaker last week, but today we're going to really start getting into the class, starting in on Chapter 1, which is Introduction to Managerial Accounting. But before we get started, I just want to take a second here to make sure everyone has had an opportunity to go on to Pearson, the My Accounting Lab, and sign into the class. If you haven't, I've uploaded these instructions to the My Courses site on the UMass website, where we have all of our online work, etc. And this is just an instructions on how to get signed into the Pearson My Accounting Lab class. We have here, we're going to go to the www.pearson.com/myaccountinglab, or my lab, excuse me. Read the instructions versus listening to me, always good advice. Under the register, you're going to select student. Click OK. You need your email. I suggest using your UMass email. And you need your ID for the class. So it's Jacobson07487. That get you signed into the class. If you can't make the payment right now to buy the online book, the ebook, etc., you can simply do a 14-day free trial, which will get you up to, basically 2 weeks from now, before you actually have to go in and buy access. You have a couple options, and you'll see it when you go to sign up. You will need the book. However, if you can get a used copy somewhere, or you can buy a hard copy or borrow a hard copy from a friend, you can just get access to the online Pearson My Accounting Lab without the book and without the ebook, and it'll save you a couple bucks. So again, the instructions are here. However, they're also on the My Courses site. So we're going to jump in here to Chapter 1, and I upload two versions of this. I have the unedited version on the from Pearson, as well as my PowerPoint presentation. And I'm going to do that for every chapter. I cut down the PowerPoint slides to really hone in on the information that I think is most important for the class, and that will be focused on the exams as well as the quizzes that you have to do. However, I also upload a version of the PowerPoint, one without my voice, so that way you can kind of go through at your leisure and go through them. But also that version without my voice will also be the full directly downloaded from the Pearson site that have all the information. It ties back exactly to the book. I edit mine a little bit, cut down the slides to make the presentation go a little smoother and really focus on the main topics we want to cover in the class. But you have both options there. The non-narrated copy might be good for you to get started or to have when you're doing homework or trying to study for exams. Note, though, that the unedited versions do not have all of the awesome memes that I add to my PowerPoint presentation here. So we're going to get started. Like I said, it's Chapter 1. It's Introduction to Managerial Accounting. Again, it's a Pearson book, so these are the Pearson slides. Learning objective number 1. We're going to identify the 3 primary responsibilities for managers. Now, again, this is for all managers. It's not necessarily just accounting managers or managerial accounting employees or workers or professionals. It's really the responsibility of all managers within a business, nonprofit, etc. So we have this little diagram to kind of visually, you can see the 3 primary responsibilities. We have planning, directing, and controlling, and that is the 3 main responsibilities. The 3 of those items together all kind of go into that decision making on the left. And managers get feedback from customers, from employees, to help make these kind of responsibilities a little bit easier and to grow and to be better at these. So as we think about this visually and kind of think about imagining being a manager or being a decision maker, i.e., maybe the owner, the controller, the CFO, a director of a department, we can see really we want to start with planning. And this is true for not only businesses, but as well as in your personal life. You can start with planning out what you want to happen in the next year, the next month, the next quarter. If we think about it academically, planning out what we want to get accomplished this semester or throughout our degree process. So we kind of start up at the beginning, thinking about what we want to happen in the future. Come up with some goals, some objectives for the semester, for the year, depending on if you're in the business or personal, whatever. We come up with a plan, we write them down, that way we can go back to them, we can fine-tune them as we go along. But we think about what we want to get accomplished and how we are going to accomplish those two things or those things. Next, this middle phase is directing. And that's what I think a lot of us kind of picture when we think of a manager. Supervising our employees, making sure whatever we're doing is getting done correctly. We're servicing our customers, getting our product in from the vendors, getting it out to the customers, collecting the money, etc. So directing the day-to-day activities, I think that's one is pretty much self-explanatory. We understand what directing people is, what happens in that situation. Apologize, I do get some emails, so that's going to pop up every now and then, so you can ignore that. Lastly, and I think this one's really the most important and one that can kind of fall by the wayside, it's the controlling phase. And it's really two parts that we're going to think about there. One, if we think about a business, we're thinking about we have a budget and we look at it from time to time. We compare the budget to the actual. So we thought we were going to grow our revenues by 10%. We look at the first quarter or the first half of the year, and maybe we're down or maybe we're only growing by 5%. So we want to take a step back and say, all right, what's happening? We thought we would grow by 10%, but we aren't. We're only growing by 5%. So it's a way of managing really what's happening compared to what we wanted to happen. The other thing is looking back and analyzing after the situation is done. So after the semester, after our year, after our quarter, whatever we had planned for it back in our first stage, and really thinking, what could we do different? What can we learn from what happened in this past semester or the past year or the past quarter? Learning from those mistakes, or maybe, hopefully learning from those victories that we had. We thought we would grow 10%, we grew 15%. Why? What happened? Kind of dissect it. Maybe it was something that happened where there was an increase in the market, a competitor went out of business. But we really want to go through and dissect what happened. It's important in business that we understand not only when we succeed, but also when we fail. And we want to dissect and understand why we succeeded and why we failed. That way we can replicate those successes, or we can correct those mistakes going forward. What we're going to happen in real life and in business is sometimes we make mistakes, sometimes we fail, and really learning from those mistakes or those failures is what's going to make us a better business person or a better person altogether. It's okay to fail sometimes. It's okay to make mistakes. In business, we're not always going to win 100%. If you think about a baseball or a football or a basketball analogy, a sports analogy, you're not going to hit every shot you take. You're not going to hit a home run every time you go up to bat, and that's okay, but it's learning from every one of those opportunities. And that's really what that controlling stage is all about. It's we come up with our plan, we're managing it, we're directing our employees, but the controlling phase is when we start to think and look back, and that's where, if we look at our diagram here, it comes down to controlling. That's where we develop that feedback, and we push that feedback back into our directing responsibility and our planning responsibility. That way we can become better directors, better planners, and therefore that control phase is going to have a lot of invaluable information there that we can gather if we take the time to really understand and not be afraid to look back when we've had a failure or we've made a mistake. Try to just take the learning out of it. After, of course, you have the day where you're mad at yourself because you messed up. After that, kind of dust yourself off and go from there. So here we have our definitions of these three responsibilities. Again, planning, setting goals and objectives. Most importantly, though, how are we going to achieve them? Very important when you're making a goal for yourself or for your business, for your company, or if you're in a situation where someone else has provided a plan or a goal for you, that you really understand how are you going to get to those goals. And it's important when you're setting goals, make sure they're realistic. All right. If you're in a situation where you're asked for an unrealistic goal, or you're setting yourself an unrealistic goal, you're setting your own personal goals or a business goal, maybe you're starting your own business or you're running a department, etc. Make sure they're realistic. Make sure they're achievable. If we're setting ourselves up for failure with unrealistic goals, all that's going to do is hurt us. It's okay to stretch yourself, maybe move your goal up a little bit more than what you thought you could achieve to make you challenge yourself, but you want to make sure you can actually achieve the goal. If you're in business and you're asking yourself to grow 45%, when for the past 15 years, the biggest spike was only 10%, it's going to be a little hard and you might be setting yourself up for failure. Again, directing, overseeing the company's day-to-day operations. I think that's an easy one that everyone kind of understands when they think of a manager's responsibility. Lastly, that controlling, evaluating the results of business operations and making adjustments as needed. Understand what just happened, dissect the play, dissect the semester, dissect the year you had, take the good, take the bad, make yourself a better manager, make yourself a better company. Controlling, probably in my opinion, most important phase, most important responsibility, because the more time we spend on that controlling phase, evaluating what happened, the better we're going to become at planning and directing, the better managers we're going to be. Next, we have learning objective 2, and that's distinguishing between financial accounting and managerial accounting. So again, when we talk about this, really what we're talking about is you guys are now all in accounting 212. Last semester, last year, maybe over the winter break, you guys took accounting 211. Accounting 211, that's financial accounting. Okay, so the 3 main points, and you're going to want to write these down. In the next couple slides, you'll see a bunch of issues and the difference between our financial and managerial accounting. Those are important. Those will help you along with the exam, also with your homework for this week. But the main 3 takeaways that you want to make sure you really understand the difference between the two are these as followed. Financial accounting. So again, what you learned in accounting 211. That's designed for external users, people outside of your company, outside of your business. We want to have, so that's number 1. Number 2, accurate, reliable, verifiable, and objective information. We are giving our financial statements, so our balance sheet, income statement, cash flow, retained earnings, and the financial statement notes, to external people outside of the business, outside of the company. So they don't have access to the day-to-day operations. All they have is the information we're providing for them. So we want to make sure that's accurate, reliable, verifiable, objective, because they're going to be making decisions. Should we invest in your company? Should we continue to invest in our company? If there may be a bank, should we loan your company money? So if anyone has ever gone onto the SEC, the website, you can look up any publicly traded company's financial statement. So again, those are all audited by generally the big 4 accounting firms, Price Waterhouse, Ernst Young, KPMG, or Deloitte. They're going to be auditing all those. And they're making sure that the numbers that the companies, say Ford, puts on their balance sheet for their assets, their liabilities, statement or stockholders' equity, those are 100% accurate, verifiable, reliable. So if they say we have a $100 million plant, they can go through and look at that $100 million plant, see the valuation for it, see that they own the deed for it. As an investor, you or I could go and buy some stock for Ford, but just because we own stock doesn't mean we can go and look at all those details, all those records. So we're putting a little bit of faith that the auditors do their job, that the information provided by the business is 100% accurate. What they're telling us is true. Without that confidence, we would not invest in them, and really the stock market would collapse without that verifiability, the reliability, and the accuracy. Lastly, when we're talking about financial accounting, businesses want to put exactly what is asked for or what is required. If we're talking about our financial statement, so GAAP sets generally accepted accounting principles, GAAP, sets standards of what we need to have in our financial statements. We want to provide exactly what is asked for us. We don't want to voluntarily give any other information. As much as we want to say, hey, we're great, look at all this great stuff we have, look at all this, these trade secrets to increase the value of our company, maybe our investors will feel happier, our bankers will loan us more money. But at the same time, our competitors, other people can go in and would be able to have that same access. So we don't want to voluntarily give any additional information. The standards say we have to provide X, Y, Z. So that's what we want to provide, X, Y, Z. So we meet the standards, we satisfy the requirements, but at the same time, we don't want to give away additional information if we don't have to. All right, so those are our main 3 takeaways for Accounting 211. External, accurate, and exactly what's asked of us. Accounting 212, what we're going to cover in this class, managerial accounting, we have 3 different standards and they kind of relate back and forth. So managerial accounting, that is used for internal users, so people within the business, inside the business. They already have information about the business they work, they know those trade secrets, so we can provide more information for them so they can make decisions, which is what our primary purpose, or what the primary purpose of managerial accounting is. It's to gather information and provide that to our decision makers so they can make decisions for our business. We want to have timely, relevant information for that decision-making process. So with financial accounting, we talked about accurate information, reliable. Those still hold true for managerial accounting, but when we have a managerial accounting report that we're giving to a manager or to the company owner, we're not going to have an audit firm or an accountant come in and verify all those numbers. They're not going to give it a stamp of approval. We want timely information that is relevant for what the decision that we're making is. Maybe we're looking at the budgets to actual, so we need the financial statements or the budget reports. We need those timely because managers, bosses, the controller needs to make decisions based off of what's going on in real time. Lastly, we're going to provide as much information as possible for the decision makers to make those decisions. It's okay to give them additional information. They're the owners of the company. They're the decision makers of the company. They probably already know all the information, all the trade secrets, all that proprietary information. They already know that. So we're going to provide them as much information because they're inside the business. Our competitors don't have access to this. So we're just going to provide whatever information we can to let them make that decision. So the more, the better. So we have here the next 3 slides. I'm not going to go through those. I just highlighted the 3 most important ones. But you can see here we have a bunch of issues. So who's the primary user? What is the purpose of that? What is the primary accounting product, etc.? And you can see in the left on the screen in green, what is the impact on managerial accounting of that issue. On the right in red, you can see what is the financial accounting impact of that issue. So again, just from that top, like I said, number 1 in my kind of brief rundown, who is the primary user? Internal users such as managers for managerial accounting. Financial accounting is external users such as creditors, stockholders, and government regulators. So again, when you think of financial accounting, we think of those SEC financial statements. I also, even though it's not technically financial accounting, that right-hand side, I also like to think of like tax returns, right? Those are for external users. Again, the number 3 thing I mentioned was we want to provide exactly what is required. Same thing on your tax returns. You want to put down exactly what is required, but you don't necessarily need to volunteer any additional information that they're not asking you for. So if you think about financial accounting, you can kind of put in a caveat over in the corner, tax accounting as well, your tax returns, whether it's the state or the IRS. So there's 3 slides here that relate to this. Again, if you go on the My Accounting or the My Courses, you'll see not only this presentation that's kind of a walk through the lecture like if you were in a face-to-face class with me, you also have the PowerPoint slides without narration that you will be able to go through and you can take your time with. You can print them out. You can have them out while you're doing homework, while you're doing quizzes, etc., while you're studying for the exam. So we have 1, 2, 3 slides there with issues, how it relates to managerial, how it relates to financial accounting. All right, so next we're going to go into and looking at learning objective number 3. We're going to describe the role and skills required of management accountants within the organization. That's learning objective number 3. We only got 4 learning objectives, so bear with me. Another 10 minutes, we'll be out the door and on our way to our next online classroom in cyberspace. So the role of management accountants. So if we think about inside of a business, we have many different kind of positions in a business. We have, starting from the bottom, people in the warehouse, people on the manufacturing line. If we're a retailer, the people at the front end of the store, people stocking shelves, etc. We then have, on the kind of off to the side, we have support staff, and managerial accountants would be considered support staff. They're going to provide immense critical thinking, insight, and judgment. They're going to be valued advisors for the decision makers. So for the most part, until we start getting up to the controller or the CFO, which for the most part, those are accountants that have moved their way up the corporate ladder, The managerial accountants, they're not necessarily decision makers. They are just kind of a tool that other decision makers in the business, they can use, they can rely on to provide information to make decisions or help them make the decision. So managerial accountants aren't necessarily going through and making those critical decisions. Rather, they're supporting the decision makers by having this critical thinking, insight, and judgment, being valued financial advisors. And when it comes to business, one day it might be talking about buying some new property, buying some new equipment, making some investments. Other days it might be, how do we get to budget? How do we increase revenues? How do we decrease expenses? So you have to be a financial advisor, and you have to understand a lot of the business and a lot of the different key aspects. One of the things that I know from reading your introductions last week, we do have quite a few financial minds and accounting majors, or people considering being accounting majors. From experience, I was an accounting major at UMass Dartmouth, graduated with a bachelor's in accounting and an MBA, went on to work at a public accounting firm. Now, I was in the audit and assurance department, so the A&A department, working with financial statements. But anytime I went to a family function, and it still happens today, people know I'm an accountant, people know I'm a CPA. So what do? How is this going to affect my taxes? Hey, quick advice. I have this investment. What should I do? I have a retirement plan. What should I do? So accountants, they just become valued financial advisors. We're asked tax questions. We're asking banking questions. So it's important that you understand a lot of these different concepts. So as you go through your academic career, you want to take in as much information as you can there. You want to stay up to date on the latest trends and happenings of the business world and of the financial world. Because generally it's not just, we're just going to look at the accounting when you're a managerial accountant. We're just going to look at the financial statements. We're just going to look at the budgets. There's going to be a broad scope of activities that you're going to be expected to understand and be able to provide information. Lastly there, as I've kind of mentioned, we're going to assist with making critical business decisions. We're not necessarily going to make them. We're going to assist. We're going to provide information. We're going to provide insight into making those decisions to support the decision makers. One of the things that you have to think about when you're a valued financial advisor, when you're assisting making critical business decisions, you kind of want to take a step back and remove your opinion sometimes from making these decisions. You want to just provide the black and white facts, the numbers, the revenues, the expenses, etc., the costs, and really let the decision makers make the decisions. A lot of the times in business, you might have people on both sides of the argument. Do we want to close a plant? Some people will say yes. Some people will say no. They can be very passionate about that. If you think about, losing jobs or having a better bottom line or losing some customers, etc., you're going to have different opinions on different people. Now, there's maybe not a correct answer 100%. And what you'll find, and as a lot of you guys have from, again, reading your bios and reading your descriptions and your backgrounds and your introductions last week, a lot of you guys are already in the business world. And one of the things I'm sure everyone either knows or will soon find out is that in the business world, unlike in a textbook, you can't flip to the back or go to the teacher's manual and say, all right, what is the correct answer? There's no there's no bank of information. There's no right or wrong answer. You have to go with what is the best decision based off of the information you have today. And the role of management accountants is to provide as much information. And again, going back to the difference between accounting, financial accounting and managerial accounting, we need to provide that information timely. We need to provide relevant information so that way the decision makers can make the best possible decision and steer the course of the company with that correct information. So again, we have some skills required of management accountants. And again, if you think about this, and as you look through on the left-hand side in blue, we have technical competencies. Right-hand side, non-technical competencies. And for the most part, especially the non-technical competencies, these are really competencies, these are really things that every business is looking for in their employees, really regardless of their job title, their major, etc. Left-hand side, technical competencies, some of them might relate directly to accountants or management accountants. But as you read through them, it's really what most companies are going to want out of their management individuals or anyone in a decision where they're supervising people or making decisions. So I would say, regardless of your major, these are important competencies for you guys to really understand and for you guys to take with you as you make your way through your college career, get through your degree, and then as you start looking for jobs and start to try to move up that corporate ladder in your careers. I had one of the things I do at the UMass Dartmouth, in addition to teaching, is I am the faculty advisor for Beta Alpha Psi, which is an accounting and finance and MIS honor society. We had about 6 or 7 professional speakers come in during the fall semester, and the key and the recurring element that these people all were looking for when they were trying to find a new hire or intern really kind of shadowed what you see here in the non-technical competencies. So every single person who came in, while they talked about the importance of ethics, that's kind of an understanding that in the business world, you need to have a strong sense of ethics, and we're going to get to that in a minute. But really, the number 2 thing there, communication, that was everyone's number 1 item. So whether it was public accounting, banking, manufacturing companies, where they're looking at the controllers, a couple controllers had come down, they all said that they want their new hires, their interns, to be able to communicate both orally and in a written, so emails, etc. So that's an important skill to kind of have as you go in business. You're going to be talking, regardless of your profession, you're going to be talking with coworkers, you're going to be talking with higher ups, you're going to be talking with customers. So people, hiring managers, hiring people are looking for someone who can communicate, who they have a trust that they will be able to represent the business. And the number 1 way to represent the business is through your communication. So I would say the non-technical competencies are something you want to be able to kind of look within you and say, yes, I have these non-technical competencies, and these are something that people are going to expect you to come in the door with. Whereas on the left-hand side, these technical competencies, most businesses will want to make sure you understand the basics, but every business is a little different. So they're going to show you how they run their business, what their internal financial reporting is. They can teach you, and for the most part, they want to teach you the way they do it for these technical competencies, as long as you have that basic understanding. And most of you guys, or all of you guys, are in a college program. Your college degree is going to show or tell a business that, yes, you are able to learn and you're able to understand and adapt. And so they can then mold you into the employees they want to be. Non-technical competencies, you better walk in the door with a lot of these, especially those top 4 or 5 where you need to have the strong ethics, communication, be able to service customers, because that's what they're counting on you to do. Continue helping them build that brand, and as an employee, you're representing that company. You're acting as an agent for that company, so they want to make sure you can represent that company. One of the hiring managers at an accounting firm who had come in, when they were saying, when I'm interviewing someone, really on the interview, while there's usually technical questions, and if it's accounting, some accounting-related questions, really what they're trying to figure out within that 15 to half an hour interview is, will this person be able to represent my company? Will I be able to work with this person and really fit into our kind of environment, our community at the business? So that's really what they're looking for. You need to be able to show that in a short time frame. So just keep that in mind as you go through and start thinking about applying for jobs, etc. Again, managerial accounting, it's not just important for an accountant. So everyone who is not an accountant, and I read a lot of it in the bios and in the introductions last week, I'm taking this class because it's a requirement. I'm hoping that you guys will realize as we go through this class that while, yes, it is an accounting class, managerial accounting is something that every one of you, and I know you guys are all going to be successful in your careers, whether it's starting your own business or moving your way up a ladder somewhere for a company, a nonprofit, etc. It is important that everyone has an understanding of accounting. Entrepreneurs, managers, the salespeople, the marketing people, even non-business majors. Because as you work your way up the corporate ladder in a business, as you get higher up, you become a decision maker. And in business or in a nonprofit environment, we're making a decision based off of what's the resources we have. How will this impact our bottom line? How will this impact our shareholders and our stakeholders? So you have to be able to understand not only the operations side of the business, but the financial side of the business as well. A business can have a great idea, but if they don't have that financial health, it's going to be hard to execute that idea. One of the stories I like to tell everyone, and kind of anecdotal, to especially highlight that non-business major, is my brother is an engineer, also went to UMass Dartmouth, got his master's in engineering, has a great job at a big company, a publicly traded company, started off in engineering, doing engineering work. As he's moved up after his second or third promotion, he is now in a position where he is a manager and he's managing people. And maybe once a week or once a month, he'll call me up and we'll discuss accounting related topics because he's involved in the budgeting. He's involved in the procurement process, buying materials, capital improvements, etc. So much so that he's decided, and he's finishing up his MBA right now, that he needed those business skills, those accounting skills, those management skills. So even your non-business majors, if anyone's in the class as a non-business major or in a position where they don't want to actually do a business related, they want to start their own company or just move their way up in another field, the operation side, eventually as you move up and you become successful, which again I know you guys all will be, you're going to need accounting. So just keep that in mind as you go through this class. You don't have to be an accountant to be successful, but you need to have an understanding of accounting. And I'm not just saying that because I am an accountant. It's just the truth, and you'll find that if you talk to anyone in a position of running a business, they need to understand their accounting, and that's probably what they'll say within that first 1, 2, or 3 important skills that they have. So learning objective 4, and this one we're going to run through a little quickly, again, because I know not everyone in the class is an accounting student or will necessarily go into the field of accounting when they're done. It's this idea of the Institute of Management Accountant. So again, I think most people are familiar with the term CPA, Certified Public Accountant. There's also a CMA, Certified Management Accountant. So it's a certification that really tells and distinguishes you from other managerial accountants, other people in that side of that world of the business. So it provides it helps your resume, it builds up your resume, it really helps you stand out, and it shows that you are a true professional of management accountant. So for the CPA exam, really that's focused on the stuff you learned in Accounting 211 as well as taxation, which if you're an accounting student, you'll take later. The CMA exam really focuses on managerial accounting and stuff that we will learn in this class, or as you continue all along, if you're an accounting student, stuff that you will focus on in your cost accounting classes, etc. So it's a professional association for management accountants in the U.S., and it provides the mission to provide a forum for research, practice development, education, knowledge sharing, and advocacy of the highest ethical and best practices in management, accounting, and finance. So again, it's kind of a club, so to speak, of the best managerial accountant. So it's one of those things where if you like the idea, you don't want to get into public accounting, you prefer the idea of working for a business, working right in industry, this is something you might want to consider as you move up that corporate ladder to move up to higher and higher, where you become a controller, a chief financial officer. Those are the highest managerial accountants a business can have. So there is a certification that will help you stand up, boost up your resume. So we have some CMA requirements here. Again, I'm not going to go through these quickly in this guided lecture. If you go onto the slides or if you go search on Google, you'll be able to find these. But just like the CPA, there is a 4-part exam for that. Here there's a 2-part exam, and you can see it's financial reporting, planning, performance, and control. Again, those are the responsibilities of a manager. We go back to the second slide of this PowerPoint. And then part 2, financial decision making, which again was on that first diagram. So it's all about running a business and making sound decisions based off of the information that a managerial accountant would provide. So we have our 4 ethical professional practices, some management accountants, and really any business professional should really have these kind of 4 cornerstones. So they need to maintain a level of competency. So just because you guys are in school now doesn't mean that when you graduate in 2 or 3 years, whatever your track is, that you stop learning. You always have to be in the top of your game. Laws are always changing. Regulations are always changing. Business trends are always changing, so you need to stay on top of your A game to really be the best you can be and be the most professional and the best employee you can possibly be and be successful. Always be learning. That's what I say. We have to have preserve confidential information. So again, when you're working at a business, those business managers and directors and the business itself, they're going to come up with how they do things. They're going to get information from clients, from vendors that's confidential. You always want to keep confidential information confidential. You don't want to be sharing trade secrets. You don't want to be going out and talking about your clients, talking about your vendors in a public place where other people can hear you. You want to keep that confidential information because that confidential information allows the business to be successful. So you want to keep that within your business. The bottom two, integrity and credibility, again, those kind of go hand in hand. But that's basically, uphold your integrity. You want to be the best person. You want to be the best employee. You want to be the best public figure you can be. Because you need to have that integrity and that credibility so people can trust what you're doing. They can trust if you're trying to bring in new business. If you have a low integrity or no credibility, it's going to be very hard for a new person to come up and be satisfied or come over and join your business. Within your business, if you have no credibility, when you start saying things, if you are known to be a liar or not be able to back up your words, eventually that's going to catch up to you where it's really going to start impacting your successfulness in a business or your employability. So you need to make sure that you have credibility. People believe in what you're saying. People believe when you make promises or you make commitments. You need to have integrity that you're going to do what is right for that business and for the other stakeholders in those decisions or in that business environment. One of the examples I like to think about is, I've done this, and I'm sure you guys have done this as well, is when you're going through, you're trying to find a product, maybe you're repairing something in your car, you're buying some sort of electronics, and the top product, the genuine part from, Mazda or Subaru is $100, but you find it online from some random website, you find that same part for $25. Almost too good to be true. And a lot of times in life, those things that are too good to be true, there's a reason we say that, because they're not true. There's, some suspectability there about it being able to come through with what they promise. So, I've been burned a few times where I was trying to save a couple bucks and bought a knockoff, Bluetooth speaker or a pair of headphones or car part, thinking, hey, I'm an accountant, I'm going to be conservative and save my money, and rather than spending, $200 on a wireless headphone, I'll spend $35, and after the third time using it, you get what you pay for and it no longer works. So same way for products. Once you get burnt once or twice by something like that, you stop doing it and you bite the bullet and you buy the real thing. In your business life, in your careers, if you burn a customer, if you do something wrong at a business, your bosses or the general marketplace will realize that rather quickly, and it's going to get you into some problems. You might have to do some damage control down the line. So I know it says here this is for management accountants, ethical professional practice, but really any business professional should really adhere to these 4 standards. I'm going to skip through this as well, steps to resolve ethical dilemmas. Again, it is in your PowerPoint without my lovely voice in it, so you can go through. But it's basically just following the rules of the business, following the hierarchy of the business when you have an unethical situation that you want to try to resolve. Lastly, you can see at the bottom there, consult the attorney. Again, when you're talking with an attorney, it's a safe bet. It might cost you some money to talk to them. But again, you have that attorney-client privilege. So even though you might be sharing some important or confidential information, they also have a standard where they have to keep that confidential information as well. So it's important here to follow the policies established by the business. You always kind of want to follow what the rules are of the business if you can. When you see an unethical or a difficult situation, you want to try to follow the rules of the business to protect yourself. CYA, if you will, cover your backside, I believe is what it stands for. And then after you've kind of gone through all the avenues, the channels that you're supposed to, that's where you go outside and try to find that attorney or other confidential person that you can discuss. A lot of businesses now, a lot of government agencies have a whistleblower where you can provide information confidentially, and you will be protected. So when not something unethical is happening, you want to think about not only protecting the business as a whole, assuming it's not the whole business doing something that's unethical. Maybe it's just a person or a manager or your boss. So you want to protect the business that you're working for, protect their brand, their good name, but also you want to think about protecting yourself, because a lot of times, even though you have the best objectives or you're a ethical person, if you let something slide, it might come back and really put a black eye on your business or your profession as a whole. So just keep that in mind. Lastly here, unethical versus illegal behavior. So just keep in mind that when we're talking about ethics, it doesn't necessarily mean that we're talking about illegal activities. So not all unethical behavior is illegal, but all illegal behavior is unethical. So if we're saying something's unethical, it doesn't mean you're going to necessarily go to jail or be fined. But at the same time, if something is illegal, if you break the law, by definition, that is also unethical. So, in doing some research for this PowerPoint, I just happened to Google, and you can do this the same, 10 unethical practices that we all do at some point. And some of them are kind of silly. If anyone here has a personal or a business computer or business phone, and you send text messages, you go on Facebook, you go on Instagram with them, technically that's a misappropriation of business property or government property, depending on if you're working for a government agency. Technically that's unethical, right? We're using property that our business or our employer has given to us for not business related purposes. So yeah, unethical. Are you going to go to jail? No, assuming you're not doing something illegal. But if you're just going on Facebook for 5 minutes, or if you've ever worked at a Subway or a CVS or a Stop and Shop, retailer, and you've talked to a friend, you've been on your phone sending a text message while you're on the clock. Those are technically unethical practices. They're minor ones. However, they are technically unethical, but again, it's not illegal. You're not going to go to jail for it. If it becomes an issue, you might get, a slap on the wrist or in trouble or potentially lose a job if you chronically do stuff like that. But for the most part, it's just unethical for you. But at the end of the day, it's not hurting anyone. But as we talk about ethics, and it's going to come up a couple of times in the class, just remember that not all unethical behavior is illegal. So sometimes, yes, you're not breaking the law, but it is not right and it's not ethical. So there's two separate considerations there. The last thing is, and one of the things I like to talk about or think about is, what your definition of ethics are. Everyone can have a slightly different definition based off of the values they have, or the norms of their community or their location or their business. But for the most part, I like to think of ethics as doing the right thing even when no one is looking, right? Really easy to do the right thing when there's an audience on you, or you're around, or your boss is around, or your coworkers around, or your mom and dad or wife's around. I like to think of being an ethical person as doing that same right thing based off of what you believe, your values, the norms of society, doing that right thing even when no one is around, right? So if you can take $1 from the tip jar because no one's looking, it's not right. You wouldn't do that if someone was looking at you. So it's really thinking about what doing that right or wrong thing when you have the opportunity where it would remain anonymous if you did it, but still holding yourself up to a standard where you need to do the right thing based off of what you know and what you believe to be true. So here we have a quick case study, and I'm going to leave this up for a second here. However, there's going to be a posting and a forum discussion. I will post it here so you don't have to pause the video here. But basically we have a Jane, she's an accountant. She has her boyfriend, fiance, Tom, and Tom has a stockbroker friend, and they have a situation here where there's something a little hinky going on. Something's not quite on the up and up with Tom. So again, there's going to be a forum discussion. The case study will be posted there, so you don't have to pause the video. So you can take your time and think about this. And just, in the forum, in the discussion, the threads, it'll basically be, the one, two, three questions here. So what are the ethical issues in the situation? Another question that's not one of the three posted here, just what are your initial thoughts or reactions to the case here? Just to have a quick discussion. You don't have to write like a 5-page essay on it. Just a couple bullet points or a quick paragraph of what are your thoughts, who's in the right, who's in the wrong, what should be, what are the next action steps that should happen for Jane and Tom and Alan in this situation. So get to that. It'll be part of your assignment for the week. That's the end of the class. Ignore this last slide, really, because this is for my in-person class. But that's the end of Chapter 1. So you have a couple of assignments on the Pearson, My Accounting Lab to get through. You also have that forum discussion talking about the case study. I hope you had a wonderful time, wonderful experience listening to my voice as we go through Chapter 1. As always, if you have any questions, any comments, any suggestions for future presentations, please let me know. But that's it for Chapter 1. We'll see you next week when we move on to Chapter 2 and Chapter 6. Please be sure to check my accounting lab and my courses frequently if there are any new assignments or random comments or questions or discussions posted there. So enjoy your week, and we'll talk to you in February. Thanks. Bye.